What's up, clan? Island Trader FX here. Of course, back with another one. I'm a bit late where this video is concerned, but nevertheless, we're still here. It's a bit chilly, and that's the reason why my jacket and what have you. Um, but we're going to quickly jump into this video. Essentially, what we'll be talking about is scaling in. I have two examples, right? I have an example where scaling in the right way did not play out, and an example where scaling in the right way actually played out. Um, Many times you will see traders, after the first initial entry, the opportunity will play out within that same leg. And if when I say leg, you're a bit confused, I'm going to break it down in a few minutes on the chats. Those traders would re-enter, adding a second position um, to the first position that they had, basically maximizing profits. It's not something that I usually do, but last week I did go ahead and try it out, and for one trade it worked out. For another trade it did not work out, but both of them was taken on the same pair, but different time frames. So we're gonna take a look at that. And of course, if you're interested in scaling in, then use it to your advantage. But let's get into the video. Ciao. Okay, so we're on the chats. So let's take a look at what I actually saw and how I actually scaled into that trade. So this is the AUD JPY trade. If we go back onto the higher time frame, we could see very clearly that AUD JPY has been pushing bullishly for a very long time. Let me just take this out. They've been pushing bullishly for a very long time, and of course, we were looking for buying sentiments. Okay, where were we targeting? Initially, we were targeting this purple line right here, which is really and truly a monthly close. If you look real closely, you could see that this is a monthly close. If we go down to our line chart, we could see quite clearly this is what we were targeting. The monthly close or the weekly close. But of course, seeing that the monthly comes before the weekly, we targeted the monthly close. Okay. At that time, we were looking for an opportunity for us to scale in, and this came as the perfect opportunity right here. So this was our very first trade onto AUD JPY before we tried scaling in. So right here, you could see the market has been bullish. There are some retracement, and then we had massive pushes to the upside. Doing what? Showing us that the buyers are coming back into power after this small retracement. So we targeted this 1 hour fair value gap. After price tapped into that 1 hour fair value gap, we covered the leg that created that 1 hour fair value gap, and we targeted the all-time high. Well, it's not the all-time high, but I would just like to call it the ultimate high, or our take profit, right? You could see we're in some dip profit right here, and then you could see price reversed all the way back down, and guess what? Price continued to push, right? So at this time we're in dip profit, and I'm going to put a few screenshots on the screen so that you could see. So at this time we're in dip profits. Now, while we're in dip profits, we're looking for another opportunity, or I would say another opportunity to scale in presented itself on the daily chart. You could see we have a beautiful daily expansion right here, and you could see price came back and tapped into that expansion. So of course, what did we do when we noticed this beautiful tap back into that daily zone? We went on our 1 hour time frame, right? We looked for an expansion to the upside, right, which created a fair value gap. we went ahead and we did this. Entered right here. Doing what? Covering this low right here. And we tried to go for this ultimate um, monthly close as well. So we was going to, according to a friend of mine, we were going to pop twice. Right? It's not something that I usually do. But you could even see the risk to reward on this one is even better than the previous one. But ultimately, price, we were in some nice profit. Let's see how much profit we were in. At one point, we were in a nice 1 to 2.4, and we could see that price reversed and tapped us out. It was kind of disappointing, but we did it the right way. And the right way to scaling is to make sure on on lower time frames, on higher time frames, sorry, price has no reason to come back in. And as you could see, um, after price taps into this PDRA right here, this daily fair value gap, you could see price has no reason to tap back into any lower time frame fair value gap right here. You could see on the daily, after price taps here, this fair value gap in the past has already been tapped into, so there is no need, sorry, for price to return back into this area. There is no need for price to return back into this area. So price tapping in here, the only thing we should be concerned about is lower time frame um fair value gap. So if on the daily time frame price had no need to tap back into any fair value gap because it has already tapped into it, we go down a time frame. So we go down to the 4 hour, and guess what? It's pretty much the same. Okay, this low right here is the low that we should be covering because price has no need to go lower, right? So on the 1 hour, on the 1 hour, when we got this expansion to the upside, essentially we were safe. We were safe on all time frames. Price had no need to reverse all the way back. But guess what? Sometimes price will just do what it has to do. But the good thing about it is that we followed our rules. So we got stopped out, no problem whatsoever. We could go ahead and delete that. Um, However, on the 4 hour time frame, we got another opportunity to enter a trade. And this is exactly what we did on a different account. Okay, you could see price pushed massively to the upside. You could see a 4 hour fair value gap form, right, showing the presence of buyers. And guess what? Guess what? We entered into that 4 hour fair value gap right here. Right after you see price push to the upside, disrespecting this bearish fair value gap right here. This massive push to the upside disrespected this bearish fair value gap right here, and also creating a bullish fair value gap of its own. So guess what we did? We went ahead, placed our buy limit right here, did what? Cover our lows, and we targeted the high again. Yep, we targeted the high again with a even better RR, risk to reward. And you could see the second time that we scaled in, it played out, right? So the lesson here today is to follow your rules. The market will do what it has to do. But at the end of the day, when you do follow your rules to pretty much all of your trading plans, it will pay out in the future. Okay, there are times it might not work, which is fair, and that doesn't mean you have to go revenge trading, right? Essentially, revenge trading will just have you dig yourself deeper and deeper and deeper into a hole. right? So you're being patient and then you look for another opportunity. And this is what we did here. So this is one example of how scaling in the right way did not work. And then a second example of how scaling in did actually work. But if you did enjoy the video, you felt like you got something from it, leave a like, share the video, comment, right? It doesn't take anything. But until then, we'll see you again. Ciao.